All right, at the time of this recording, gold and silver prices are down. Now, they did start the day in the early hours up. Gold was almost as high as 1863. Silver was almost as high as $25.56. And then right after 8 a.m. Eastern Standard Time, both assets dropped. It was almost like a straight drop with with both of these guys. Now, you may be asking, well, why did this happen right around 8 a.m.? Now, there are a lot of things that can go into this, but the main thing that's screaming out to me right now is the Forex markets. Because right around the 8 a.m. Eastern Standard Time, you have the overlap between the London and the New York sessions, which happens to be one of the most volatile times in trading when it comes to Forex. And if you take a look at the currency pairs, and I say currency pairs because, that's how gold and silver are traded in Forex. Gold is traded with the symbol XAU USD. So they're comparing gold to the dollar, and silver is compared with XAG to USD. So there's a numerator of gold to the denominator of the dollar, and for silver, there's a numerator of silver to the denominator of the dollar. Now, if you take a look at these guys, and you take a look at their trading movements during that time, you can see easily volume spiked in the red, selling volume right around that 8 a.m. time. Same thing for silver. Volume spiked extremely high, selling volume around 8 a.m. So that's just one thing to take note of. When you see those huge spikes around that 8 a.m. time, you almost have to think, okay, something's going on in the foreign exchange markets during that huge overlap. Now, you may be saying, well, why does that happen? Just because there's an overlap here between the New York and London sessions. Well, they happen to be some of the most volatile. This happens to be one of the most volatile times because there's so much trading happening here between these two sessions being overlapped. Now, I don't want to leave this video off on a negative note because I do want to talk about something that's also very positive. And one of the positive things that I've seen is the 10 minus 2 year yield curve steepening. And if you've been paying attention to the bond market in the news, you may have been seeing some analysts mentioning steepening, but many aren't talking about it a lot. But currently right now, the 10 minus 2 is sitting at 1.01. That's a little bit over a third of the way to the peak of the 2011 peak, where we got up to about 2.84. So we're a little bit over a third of the way there. Now, a lot of that started to really take place after November, obviously because of the election results, and we know how markets became a little bit more exuberant around that time. But ever since November, we've been seeing a huge steepening. So we'll see how things continue, but I assume that as this year continues, we're going to see it steepening more, especially with the rollout of the shots, so to speak, coming out, and more people probably getting out there and shopping more. And also with not even just consumer price inflation, but also producer price, etc. Now, one of the things you have to remember, too, is that with this yield curve, it's an inflation expectation. So there's an expectation of inflation coming. So we will see how the markets react to this. But again, back in 2011, gold and silver prices reacted pretty well. The thing that happened right after is that there was yield curve control that was exercised that dampened the progress of prices continuing to rise. So if we start to notice that prices are rising along with the yield curve, we always have to keep in the back of our mind, will the Fed exercise yield curve control? And that way, you're going to have to prepare for that. So keep that in the back of your mind as we start to see prices rise along with the yield curve. So guys, there's my update for today. Let me know what you guys think in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.